How's it going, everyone? It is Thursday, March 7th, 2024, and this is the video for today. So I'm going to switch up the video format a little bit to go over the previous picks. Look at that first, so that way it's easier to find what the picks have been doing. So our last pick was IBM. So we're going to pull up IBM here, which is already pulled up because I'm dumb. See that I called it out yesterday with this HA reversal off this candle. So that's what I was looking for. And we took the position right here. It is about break even right now. We had some selling, some late day market selling. Held a bit here. Today it gapped up, poke higher. Tested this level again. We formed a base, a higher low. And we're starting to climb off that base. So IBM is looking still pretty nice. And we have some room to surge higher. So not worried about this position at all. We do have a CDS expiring tomorrow. So what I would do is, since this is above VWAP, we're starting to stack some greens over here. I'd probably close the short leg and maybe buy the long leg of the position. So you can close, if you wanted to leg out, here would be a pretty decent time to leg out. You take the win on the short position, and then you're able to ride up the long leg. So I might be doing that. But IBM, we're still not worried about. The other one that we took a few days ago was Netflix. So we took a couple of wins in the prior positions. Netflix, big move up, had to come down, tested this support here. And then today, if we look at the M5 chart, you can see the price action confirming the support level. Every time Netflix dips down below, rally back up, rally back up, rally back up. We are taking out all of these sellers. We're working off all of the supply. And now we're starting to inch higher. So if I go to an H1 chart, what I'd like to see for Netflix on the H1, so we already got this H1 bullish cross, which is good. We are breaking through this area here, and we start to fill in some of this gap, 1150, and we start to gain some relative strength to the market because it's not relatively strong right now. When we start to gain some relative strength, that's when I would consider averaging down on the position. But until I see that, I'm not very eager to average down because I know it's choppy, but it didn't quite show me the strength that I wanted to see during this market stage higher. TMUS. So we got a big bearish engulfing candle today. Looks like we have some heavy selling in TMUS at this level. So that's, luckily we're at a PCS. We're not taking a longer position, so we're not super worried about that. But this is something to be cognizant of. So we're going to wait to see how this holds up to the end of the day. We're going to set our alerts. And we're just going to monitor the stop, right? All it has to do is be above 62.50 by the end of next week. So I'm okay with this bearish engulf. It's a choppy stock. It makes bearish engulfs, and there's a lot of buyers here. There's buyers here. There's buyers here in the breakout. They're going to be at least supporting this move. I don't need it to do anything amazing. I just need it to not completely suck. But speaking of positions that are sucking is our MS PCS over here. Got sucked back down in the range. Our stop was over here, and this is an interesting lesson in our trade management. So first of all, I didn't put the position on and not being okay with taking a max loss. If I know I can take the hit and I know I'll be able to rebound. So worst case scenario, that's what happens. Now, what are our other scenarios? Well, we're back at this range. We could break in or break out. Now, breaking to the downside seems more unlikely, but at least it would let us ride out our long puts and close our short puts. We would be able to take a directional position on this trade. If we're able to break out, then the trade does what it wants and we end up being in profit. So we have to give it some time to let the trade go. Unfortunately, because we're trapped between these two ranges, it's not exactly the type of price action that I wanted to see. So we don't have to worry about assignment risk. This expires on the 22nd. So we have another 2 weeks for this to break out of the range. We have a strong market in our favor as well. So that is going to give us some tailwind to lift it off. And we just have to close above 88. That's what we're watching for in MS. So our longer term market buys here. Yesterday we had a bit of selling, which I didn't like this candle right here, but we knew we had to see a strong reaction on the move higher. So today we had, or sorry, yesterday we had a gap up and we hit some, let's look at it over here. We hit some levels at this 511, 512 hit the gap. We got some quick selling and then it pretty much phased out and we held and preserved all of this gap, right? So I believe that was a nice win for the bulls. Today we had a gap up, we tested the downside and we started to inch higher, okay? That's important because we didn't fill in the gap immediately and we saw some nice steady buying to make a new high of the day and challenge the all-time high. Now, here we're starting to get a lot of mixed candles in the market. We're trying to make a new high, come back, try to make a new high, come back. But we are getting some higher lows and we're holding VWAP. So we know that buyers are still in control of the move and they're not able to get it on the first few attempts, but they are able to get it on the next few attempts. So we are still pretty bullish intraday. The market is looking strong here. Mega cap tech is very strong. Flight to safety is low. The rally breadth is pretty wide. Financials are a little weak today, but they've been strong for quite a while. So I think it could just be some profit taking and perhaps some money flowing out of those areas in the short term. Long term, we're still looking at swing trading. We're still looking at out of the money put credit spreads on very, very strong stocks. And on extremely great daily charts, we can take long positions and ride them out. So that's personally what I've been working on. And we can do that both intraday and on the daily. So I'm going to give an intraday example first of such a position. So we're going to pull up QCOM here. QCOM was great yesterday, and it's looking even better today for a day trade. First off, in the daily chart, it is strong, but you can see how it makes big moves, comes back down, big moves, comes back down. So after a big move like this, I'm less inclined to chase here for the swing. I'd rather it come back down and then move back up higher, and then this would be a much better entry point where I can ride out the position. So why do we like QCOM so much? Well, first on, very strong during this initial market dip, moving higher, steady green candles. Also not a massive move up, a small move up, and then it started to grind higher and higher. So I saw this move here. I set an HA reversal alert, and I got the alert right around here. If you look at this flat bottom HA candle at 11 o'clock. So right here, I got the alert, and I took a call debit spread right here. Now, because I took a call debit spread, I wanted to take profits on this extension up into the stock, and I took a nice 20% in a couple of minutes, which was really nice. However, if I was trading shares, here's what I'd do. Enter here, gains higher, we hold and we break up over here, add to the position, then we see some tails and we start to see it lose some relative strength. So we say, okay, well, I took profits on this position here when we got this double top. I wasn't as confident and the stock had pitter-pattered out. So I would take some of the position off here for some nice gains and watch it. And I knew that we both know that two things. One, this stock is going to make another attempt at the high of the day. And two, the market isn't completely going to tank. We know there's buyers still supporting the move, right? We're less bullish, but we're not bearish. That is important. So we're able to ride this out higher, and we're waiting for this next LRSI cross and HA candle here and see if there's still any buyers left for the day. We saw that yesterday. It made a pretty nice move, and then it kind of petered out. Today it's looking a lot stronger. So once we get buyers on that level, market's looking strong. If it makes a new high of the day, this pullback is over. You could add to the position again and ride it out higher. If you're less bullish on the market, less bullish on the stock, perhaps the retracement is longer and deeper than you would have liked, then you don't have to add to the position and you can take profits near the high of the day, even if it is a double top. So how would you play that? Again, enter. You can even do an add here if you want. Enter, add, take some off, and then exit over there. Now, how would this look on a longer term chart? Well, I'm going to bring up GE because GE has been very, very nice. Let's look at the daily chart for GE. This is as much an exercise as me as it is just a talking point through this. G over here, brace compression of the 13th, nice follow through over here, brace compression, add, follow through, brace compression, add, add. And every time you add, it is a potential entry point as well. So GE is one that I would potentially consider a nice longer term swing and look for points where you can add and ride out the position pretty much all the way until earnings. I've been making a list of some excellent D1 charts, and let's take a look at them. So spot is one. Once it breaks out of compression, it is a very nice add. GE I mentioned earlier. AXP, nice tight price action, broke out of compression today. You could take that as a swing. Wells Fargo has been nice. Finance a little bit weak today, so there may be an entry for a pullback coming pretty soon over here. Once we pull back a little bit, break out of this compression, you could get in on the next leg higher. That'd be a great entry point. JPM selling off a decent amount today. First red candle in a while, but we're waiting for that support, and we expect this red candle to be gobbled up pretty quickly. And if it's not, then we know we have another opportunity to exit on a double top. Cost has earnings after the close, but if you just look at this move higher, and we called it out earlier in January, you can see how you could have just rid that move higher. Ridden, I think. Rid that move higher and higher. Builder is a little bit looser than the other ones, but still the general trend is up. You can follow this 8 EMA slope, and it has a nice, look at that, 45-degree angle from bottom to top. EBVV also pretty solid mover, a little bit looser than the other ones, has a couple of red candles, compresses a little bit, but definitely something that I would consider taking. So you can just see a lot of nice tight price action stocks that are coming up on our radar. So our long-term bias is bullish, our shorter-term bias is bullish, our intraday bias is bullish. Market opponents are looking good. We are kind of around this resistance. We confirm support around the 505 level on the market. What are we trading? What are we looking at? So my pick for today is going to be ASML. Now, this is a bit of a wild stallion, and it's going to be a learning experience for me, and I guess whoever even watches this video and takes a position on the stock. So, first of all, it's a chip stock, and chip stocks are the hottest game in town right now. If we just take a zoom out over here, was kind of choppy, and then the nature of the stock changed, which is huge, right? Started to move up higher, and really started to take off. Post earnings, held the gap, started to climb higher, dip, compression, broke out of the compression, and now we're actually getting this rally staging here. It's a bit of a choppy beast, it's a bit of a wild ride. Moves up higher, tests this breakout, and then gets its next stage. But I believe that this is one that we can most likely stick with until we get a bearish engulfing hammer, or a bearish hammer or a bearish engulf. Those are two separate things. So ASML, let's look at the intraday chart. Very nice move. There's a couple of nice entry points. I like to wait for a little bit of a pullback personally, because I want to be very particular about my entries. You can see here on the open, started to move up higher. Once the market started to dip lower, it started to hold. So you had an entry point earlier that day. You can take it even 11:35. You can take it at 11:30 here. We're pulling back. HA reversal. I actually ended my trade here at 10:46, and we can ride this move up a very decent amount. I'm expecting a little bit of choppiness. So my expectation is if you want to day trade ASML, enter in these pullbacks, move up higher, wait for your signal to exit the position. If you want to swing it, have a size where you could withstand some noise, and then you can take advantage of this strong move. So ASML is our target. If you're day trading it, watch for some of these signs here of a bearish reversal, bearish engulf. Know it's a bit choppy, but also know that we have excellent, strong price action in our favor. We're still making new highs, and it's unlikely that this stock is just simply going to roll over. For doing a short-term trade, I would go here and, maybe take a target of like 1070. That's a nice short-term swing. If you're holding it longer term, I think that also works very, very well. I'm trying to think what I should do pick-wise for this video. I think here's what we'll do. We're going to do a split position. So we're going to do one short-term swing where we hold it overnight, take gains at around 1070, 1075 maybe. And then we're going to have one position that is just a longer term swing. So we can see how this plays out over the course of the month. And we can learn how to handle some of these wild rides like this. So ASML is my pick for the video. Let's add it to our positions. And that is it for today. I will catch all of you guys in the next video.